Hello traders, it's Monday, the 29th of May, 2018. It's 8:02 a.m. Chicago time. Thanks for joining me. And welcome back from a long weekend. It's not Monday, it's actually Tuesday. Holiday yesterday in the US. My brain is still on the weekend. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall stance this morning is risk off as the market wrangles with what is potentially an all summer issue with the European periphery, namely the Italian market. So core bonds are getting plenty of flows. We'll look at the Bund in a minute. In Europe, consumer confidence also missed expectations. There are a ton of political uncertainties. Big question is whether events would impact the ECB's potential normalization plans. And also there's that additional comments from OPEC and Russia suggesting that rising oil supply has pushed crude oil to its lowest level in 2 weeks. Crude, of course, has moved 4.5% plus on Friday, just on Friday's session, and continued to fall, I think, for a correction of about a total of about, somewhere around 8% or something. So pretty good movement there. We looked at that on Friday afternoon to see what was going on. So that's what we've got. As far as looking at today, we did just get the S&P Case-Shiller numbers for the housing, but the main figure today is consumer confidence for May, expecting 128. That comes out at 10 Eastern, 9 Central. And then we have some ECB speakers later in the day. The week looks pretty busy. There are quite a few figures coming out tomorrow across Europe as well as the US, ADP, and so on. And then we end May in a couple days. And on Friday is the 1st of June, the first Friday of the month. So Friday gets unemployment and non-farm payrolls, and that's a major figure. So there's a lot spread out through the week, even though it's a short week for the U.S. markets. There's a lot going on this week, probably a relatively active week. Looking at the overall performance this morning, like I said, allocation is to safety. The 10-year, the U.S. bond is leading the pack this morning, up another 28 ticks or 0.61%, followed by the dollar up 52.5 cents. The Japanese yen up 32 pips, and the U.S. Treasury note up 12.5 ticks. Everything else is red, with crude dragging behind everybody. Crude July is trading at 67.07, down 81 cents or 1.19%. Euro stocks and the DAX, of course, seeing outflows. So they're also at the bottom of the heap, down about 1.18 to 1.09%. Let's look at what we expected Friday versus what we got. Here's the expectation for Friday on the primary scenario. These are the scenarios or the key ideas of the day. The expectation is immediate drop, only to pop up, get to the point of control, and go sideways into the holiday weekend. Second scenario, small test down, push into the point of control, then fail, and then hold steady into the weekend. In the 27.18-17 area. Remember, for a couple days, we traded around 27.20, a key high volume node on the bigger picture. You can see that there's a fair amount of volume in the composite over here. The tertiary, or the third scenario, is a test up to the low volume node from Thursday, and then sellers step in and move it through 2700. And as I said, a retest of 2700 is likely to fail, and it did overnight. This is what we did on Friday. Okay. So this is what we've got. We opened up, tested lower, pushed up, touched the point of control to the tick at 27.27, and then proceeded to move back down and hold sideways. Scenario one on the nose, just not much opportunity in my opinion. Oh, I need to remove this, scrub this day out. Not much opportunity, in my opinion, once you had the initial morning swing. Carrying that over into the overnight session, which has been very busy. The overnight session has twice the volume, twice the normal volume, or the expected volume. We opened up. We opened up our session on Sunday with a gap up, consolidation up at 27.31.75. Basically a continuation of Friday after consolidated below. Remember, Friday was trading right on top of the point of control on Friday is right on top of the MC point of control, 27.20. Remember, that's a key figure. Okay, so that's where we put our point of control on Friday. It happens to also be the point of control of the Globex session. So quite a bit of balance here. So we expect a pop from here up or a drop down. And we got the pop up, consolidate for most of Friday session, Sunday session, and then drop into Monday's open. Monday, nothing, completely sideways, very little volume going through. And then we reopen Monday night at 5 p.m. Chicago time, 6 Eastern, and we consolidate for a little bit, but then it starts to get heavy. And as soon as Europe opens, just sellers come in strong. We just drop very quickly. And we're currently testing from below. We pushed into 2690, which, by the way, is a stock zone from a while ago. See that? 2690.75. It got to 26. So there's the stock zone, 2690.75. It got to 2690 and a quarter, pushed by 2 ticks before the bounce. And we're retesting from below. The bulk of the volume is in this area between 27.06 and 26.93. We're likely to open in this 2700 area. If you recall, 2700 is the big low volume node. So if we take a step back and we look at the composite, just look at the bigger picture, what has happened since the big drop on February 2nd or so. In fact, I take this back to January 26th. And what we've done is we've moved into this high volume node, and we've consolidated for days with this pretty tight triangle at 27.20. This is the normal auction behavior. I think I talked about this before. Normal auction behavior, we run through low volume nodes, we consolidated high volume nodes, test, pick up energy, and we either break higher to test the next low volume node, or we break lower. But in either case, we know that as we consolidate on top of a high volume node, we know there's energy for the next move. We're likely to break from there. You just need to be prepared. You can use several things to measure that, the volume delta, a pattern, whatever. And so we're trading down here on this yellow line at 2700, and 2700 is right in here. This low volume node right here is 2700, and we are opening right on top of it, 2700. So we're on the edge of one distribution. So this is one high volume node distribution. This is the next high volume node distribution, where in between we are either going to move lower and accept the high volume node down here, the HVN down here, which puts us in the 2670 to 2640 range for a bit, or we move back up and get back to 2720 and consolidate at that fair price again. And today we're likely to just need to watch and see what's likely to happen, what's likely to take place. So a quick look, though, at the Bund. The Bund is the German 10-year note. It's traded on Eurex, so you'll need Eurex data for that. And this is basically the safe haven for Europe. Okay, the German note. And unfortunately, let's kill this. Hang on. Let's clean this up because it gets messy when you zoom out. Let's kill everything else. Here we go. Boom. So, Bund, completely boring sideways trade through April and a good portion of May. And then things start to pop in with this Italian election and the fact that there's a lot of discord in the Italian government, and we get this rip up to all-time highs. And now, because of this parabolic move, you have, this is like Bitcoin, you have this parabolic move. It is not sustainable, and it's likely to fall to the previous balance right down here in the long run before it stabilizes and it makes the real move, the true move. This is just what you see here is panic buying on the Bund. The Bund's yield moved from, I believe it was like 0.78% to 0.35% in just a few weeks. The yield on it was cut in half in just a few weeks. That's a big deal. Remember, this is a macro product, and generally these products don't behave that way, don't trade that way in the short run. So what we had is a pretty good squeeze. You look at these profiles, and there's definitely no consensus. You see these profiles, and they've got a really jacked up value, just strong point of control near highs all the time until last night. Last night it shows a bit of an excess high. There's quite a bit of volume near the high, and now we've got a point of control that's at the bottom, whereas before the point of control is pushing near the top, giving us a weak high, and now we're getting this rest period today. So over the last couple days, it's been on a tear, and it's probably the theme that's likely to drive what the summer is going to be paying attention to. We have two main things to pay attention to, of course, over the summer. Let me just scrub this out because it really bothers me. Two main themes for the summer. One is this European periphery issue. And then the second is the trade issue with China and the U.S. There's still news flow on that. It's the more surprises, the more likely we are to see a response throughout. So when I look at the news feed, there's just a lot going on that relates to what's going on in China, Italy, some stuff in Spain as well, potentially, and that's likely to be the theme for us for the summer. So my charts are loading, scrubbing. Probably shouldn't have done that right now, so let's just use it as it is. Well, let's give it a couple seconds, see if we can get control back. Otherwise, I'll put my hypotheses on here. Come on, baby. Oh yeah, North Korea. That's another one. North Korea summit, Singapore. That should be interesting. A lot of political maneuvering going on. All right, this doesn't look like it's going to be done. It'll be done in a second. It just isn't ready right now. So we're opening at 27. We're trading around 2702.50. We've had a quick run up. Oh, here we go. Got control. Very cool. Monday's wiped. And now we can shift up to see what stock zones are beneath us. As I said, the overnight lows on top of a stock zone. The overnight high pushed through. And we are right down here at 2705 with a big area right here, a gap zone at 2701.50 mid and 2700 century figure and the key low volume node in the area. Lots of turbulence in this area. The expectation is to open auction out of range. I expect it to make an attempt towards the prior range. I expect this to get tangled at 2707.50, and then I'm looking for an impulse down back through the 2700 eventually at some point today, get tangled with the point of control down here and push again to the overnight low to break, get us the overnight stat, finish up around 2696, 2700. This is where I expect us to finish today. That's the primary hypothesis. The main flow on this is downwards. Okay, the main energy is downwards. The secondary is an open auction. The tests higher, fails, tests lower, fails. We have sideways open. We eventually push through the 2700, get down to 2696, consolidate, and then we start shifting up to 2707.50, consolidate, and hold somewhere in the middle. Okay, that's scenario 2. In this scenario, the overnight stat, the overnight stat does not get done. The overnight stat's too wide. The high is too wide for this scenario, so the overnight stat stays intact. And the main impulse is up, and that gives us the opportunity for the next session to move up to 27.15 and then back into balance at 27.20. Those are the two key scenarios. Because we're opening out of range, in a gap like this, remember there's a higher probability for a push and a trend when this occurs. So the third scenario is either an open auction that breaks or an open test drive. And if we do get a drive, then we are likely to bounce around at 2696, between 2696 and 2690. And we're starting now make a push for 2681 on the test down. That's the rip your face off, go lower scenario, where it shakes out the weak shorts and then becomes initiative. The big question is, do we fill this gap zone or do we not? That's really what we're monitoring today. Do we move in and fill this gap zone? So as soon as we open, I'll look for the midpoint, the 50% point between the low of Friday, 2713.75, and the opening print. And as long as that's not breached, I'm going to be trading from the short side. Okay? So even if it's an outside in, meaning it's an open auction, it just goes sideways, 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 I'm going to be favoring the short side given the gap down. And if it becomes responsive, which is scenario 4, test down and an impulse up and start filling the gap, then we'll see that early on. It'll cost me a stop, but that's information that I can use at that point. Okay, so those are the three main scenarios. There's likely to be quite a bit of action today. We've often started out an open auction out of range. We've often started out very slow. So be patient, but once it breaks, we're likely to see a trend in one direction or another. Good luck.